Bitcoin is having a major correction right now from the top side of our bear flag pattern. The last time this happened, we went down over 36% from the top. Bitcoin, of course, breaking down from the rising wedge. We're also going to talk about what I think will happen next. And very importantly, that it always takes approximately 40 to 50 days on daily for a rising pattern before we break to the downside. Now, I want to start by looking at South Korea. We have an absolute bloodbath in South Korea. The index crashed over 8.4% going into the weekend. Over 509 trillion won has been wiped out. That's over $370 billion that has been wiped out from the Korean markets. And of course, this is majorly caused by the US-Iran peace deal that looks like it's cancelled, and we might see some further escalations. The Asian markets are bleeding. Let's see what happens on Monday if we will continue the downtrend, of course, as going into the weekend is normally not a good sign when things go down. And Bitcoin, of course, also going down right now, as we can see here in our bear flag pattern. We have predicted previously that we will get rejected somewhere here at the top side level of our resistance, similarly to what happened last time. And this has played out right now. Looking here at the worldwide bond market, so we're looking at 30-year bonds, we can see that they're basically all super high at really high levels, and the same levels that they were at the dot-com bubble around the year 2000. The Japanese bond market is really high. The British one, the US one, they're all extremely high. And I think even the UK 30-year bonds, they're the same high, that is the same level. I think it's almost 6%, the same like it was in 1998. And well, we have now, as a result, this is because, of course, high inflation readings. People expect inflation to be high in the future. Therefore, they demand higher interest rates for 30-year bonds. We can see also that for the first time, we have a higher prediction of rate increases going into 2027. So you can see here the likelihood. Right now, the target for the federal funds interest rate is between 3.5 to 3.75%. Okay, and right now we can see going into the future, this likelihood reduces. So there is a higher likelihood that we will increase the target interest rate from 3 to 3.75 to 4%. And you can see that in the first meeting of 2027, these are the probabilities that we will have a rate increase. And well, if we compare right now what's happening to actually 1993, just before the dot-com bubble, we are in a very similar situation. I just want to highlight this. So we obviously had a bottom for the interest rates, and then we went to the top side, while of course also the markets have been going to the upside. And the same thing is happening right now. We had the bottoms during COVID, interest rates go up, and markets are pumping majorly to the upside. Now we're reducing the interest rates slowly, as of course we're reducing the interest rates right now, and the same thing happened also back then. Interest rates were being reduced as inflation was kind of getting under control, and then eventually interest rates are increased again as inflation is getting out of control. Same thing happened last time. Stocks continued rallying up, and right now, of course, with the war, with a lot of uncertainty in the markets, inflation is again getting out of control, and interest rates can be expected to be increased further, and this could lead to a correction. So I'm just trying to highlight what happened here. This is very similar to what happened just before the dot-com bubble crash. So I know a lot of people are predicting a major stock market crash, and there are similarities. That's what I'm trying to point out here. Going now into Bitcoin, we of course have our rising wedge pattern, which we discussed, which is a bearish pattern. Usually we trade in the rising wedge, we go towards the end of the wedge, and if it's rising, it's bearish. If we have a falling wedge pattern, it's just the opposite. So we usually have a likelihood of breaking to the upside, of course. And right now, it looks like we have confirmed that we're going to the downside. Looking here at Bitcoin, this is very interesting. So first of all, let's look at the 200-day simple moving average. This is one of the most important charts to indicate us if we're in a bear market or in a bull market. And in a bear market, we usually get rejected from the 200-day SMA simple moving average, which we have been rejected from exactly perfectly right now, which I also highlighted a few days ago. And if you look back last bear market, also we got rejected from here 2 times. And then the moment we broke above the 200 simple moving average line, which is of course just the average price over the last 200 days, we went into a bull market. And the same thing last time, this bear market before that, the moment we went down, we got rejected from it. The moment we went above it, we went into a bull market. And now I want to highlight something very important, which has been brought to my attention in the comment section actually, which is that we have a bullish divergence, which is true. So right now we can see the RSI is upward sloping, and usually looking back at history, this happens in the bottom of the bear market. Last bear market, we had the Bitcoin's price going down and the RSI starting to slope upwards. And also, usually in the top of the bear market, we have, of course, a bearish divergence. So here we had the last cycle, we had the top of the bull market and the RSI was downward sloping. So we had a bearish divergence in the top, and also this cycle we had a bearish divergence where the RSI is downward sloping and the price is upward sloping. And right now, of course, the price is downward, we're in a bear market, while the RSI is going upward. And this is just an indicator that we might have soon the end to the bear market. Of course, I think we're gonna go one more leg to the downside, but what could happen if we draw it this way, the RSI, like this, the RSI could here create a higher low and simply go down here as we go, of course, to the downside over the next couple of months. As predicted, we're at the top side of our bear flag pattern, but then eventually the RSI will break up from here, which will, as you can see, create, of course, still a bullish divergence, and the RSI is upward sloping while the price goes down, eventually creating a reversal. So thank you for highlighting this in the comments. And looking at the liquidation heat map, we can see that we have almost grabbed all of the liquidity here towards the bottom. This is, of course, where people get liquidated on their positions, hereby on the long positions, and these are the short position liquidations. Wherever people short, they get liquidated above their price. And we can see almost all of the liquidity is grabbed. There are still, most of them is around about up to $77,000. There's some liquidity left, which makes me believe that we are going a bit further down and then going to all of this liquidity, which is now building up to the top side of people starting to short the market, of course, as it makes more sense to short the market, which personally I am also in a short between $81,000 to $84,000. And if we go here up, I will just add to my short position. I'm not worried, but I still believe that we can go down and then grab this liquidity to the upside, or we can potentially grab it now and then go to the downside. But I still think, because we have that CME gap open, that there's a likelihood that we will go towards $84,000. If not, then we will grab that, of course, as we eventually go back into a bull market. But usually these CME gaps tend to be grabbed, and I think we will grab that before going further down. Now, looking at Bitcoin right now, we have, of course, this major resistance line, which we've now confirmed a break down from. Here right now, line was approximately $79,000. Now the next line, which we are looking like we're being supported from, is right here, which has acted as previous resistance, it has acted as previous support right here, and now might act as support again, of course, around about this $78,000 region. If we break further down from there, we have another area of strong resistance and support right here, which is approximately at $75,000 to $76,000 in that region, $75,000 region, which can also act as major support. Now I want to highlight something new, which I have not highlighted yet in my videos, which is that on the daily chart, usually a rally takes approximately 40 to 50 days. And right now, exactly, it has been 44 days. And this is very similar to what happened last few times. We broke down. So the rally took exactly 44 days. The last time we had a rally that took 39 days. On the daily, before that, 54 days. One sec. And before that, you can also see the rallies usually take between 40 to 50 days. So it makes sense right now for us to go down here, coincide with what happened last time. And I think, of course, we will go down eventually and then create one more rally, which will also last between 40 to 50 days. And then eventually we'll find a bottom somewhere in October of this year before then going to the top side. So I hope you guys like that video. As always, don't panic. We stick to what we can see. See you tomorrow. Bye.